the property tax will, or the property taxes, that's what we're gonna start with. But the Senate and House Conference Committee on Taxes will reconvene Saturday, May 21st. Before we start, just a couple housekeeping things. I want to make sure everyone, number one, has the most updated spreadsheet, which is 521, and it has a 619 timestamp. So that's what we will be working off of tonight. Just to kind of give you the agenda, kind of the lay of the land here. We are going to start with finishing up a little bit of work that we stopped this afternoon, which was Rep. Davids had an oral amendment on the pass-through entity tax. We'll be taking that up again. Then, members, we will be going through, we'll be doing a walkthrough through the spreadsheet. Remember, it's the one timestamp 619 today. And then we will be doing, and we will be adopting the spreadsheet. And then as time allows and as are ready, we know some of our articles are already buttoned up, and we will bring those up tonight for adoption. And then the ones that we're not able to get ready for this evening will be ready for tomorrow morning. So that's just kind of the gist of what we will be doing with. So we're going to start here with Representative Davids. You might recall we had the A57. Mr. Chair, if you want to remove the A57, and then we'll go to Rep. Davids with his oral amendment.
I will move the A57 amendment.
Thank you,
Rep.
Mr.
Davids?
Chair and Madam Chair. We have the A57 before us. If Ms. Pollock could have an oral amendment that we could vote on that we had talked about as right before we left earlier today.
Ms. Pollock?
Madam Chair and members, yes, Representative David's oral amendment would be as follows. On line 2.9 of the A57, strike A. And then on 2.10, after percent, insert of the. And also on 2.10, strike interest and insert interests, plural.
Any questions, members?
Madam Chair.
Yes, Chair Marquart.
Thank you, Madam Chair. So just clarification, does this make any substantial change to what we want to do? Mr. Kleeman?
Madam Chair and members, this does not create any substantive changes. It's a clarifying change. And basically what it does is it just clarifies that you cannot have, that unless you have a tiered partnership, you can't really have an interest in a partnership that is collectively held by a single individual.
Okay.
And so it's just clarifying.
Very good. Thank you. Thank you, Madam
Thank you for
Chair.
the excellent question. All in favor of Rep. David's oral amendment signify by saying aye.
Aye.
Opposed? Adopted. Thank you, Representative Davids, for that clarifying language.
So,
That's
Madam
good.
Chair, I would move the A57 amendment as amended.
Yes, thank you. We do need all those in favor of adopting the A57 as amended, signify by saying aye.
Aye.
Aye. Opposed? Adopted. Thank you.
Thank you, Madam Chair.
And now we need to adopt the underlying provision, members. This would be Senate Article 2, Sections 4 and 6 as amended. We've spoken about this earlier today. This is the pass-through entity changes, now including the A57 with the David's oral amendment. Ready to vote? Fully informed, ready to vote? All right, all those in favor signify by saying aye.
Aye.
Aye. Opposed? The section has been adopted as amended. Thank you, members. Next, we are going to move now, as we move into our property tax, our spreadsheet, we're going to start with property taxes, and that will be Ms. Scho.
Good evening, members. Kathy Schill, House Fiscal Staff. Once again, as Chair Nelson mentioned, we are working from the spreadsheet that is timestamped 619. And I will be highlighting pages 7 and 8, but we'll start on on page 1, line 7 are the totals for the property tax refunds, aids, and credits. For 2022-23, the amount is $71,665. And then in the tails, it's a negative $144,850. Highlighting the changes on pages 7 through,
Oh, Ms. Schill?
yes.
Just one question, please. On that negative number for 24-25, there's some interaction there, I believe, that maybe you should describe as to why it looks that way?
Excellent, Madam
Michelle.
Chair, yes. And this will be identified as I go through some of the changes, but remember, we have been working with this property tax refund conversion from the actual property tax refund in the aids and credits part of the spreadsheet. It will then convert to an income tax refund. And so when we do this, when we repeal the existing provisions for the property tax refund, it creates a negative impact. And so when we take a look at the aids and credits portion of the spreadsheet, that's why you'll see that negative amount in the tails 24 and 25. I'll point that out as I move down
Oh,
the
thank you.
spreadsheet for the changes.
And then just one last question, though. Does the entire amount, negative $144,850,000, does that all reflect the income tax refund? Or what would be the delta of
It's-
that?
Right, and you can see the delta between, if we take a look on page 3, which is Ms. Templin's portion of the spreadsheet, lines 36 and 37 have both impacts side by side. And on line 37, you'll see in brackets the negative 31, or 231,600 in fiscal '24, and the same negative 234,700 in fiscal '25. Those are the repeals that will show up in the portion of the spreadsheet that I will be going through.
Oh, thank you so much for answering that question right away. Now, to your presentation as intended.
Perfect,
Ms.
thank
Schill.
you, Madam Chair. And so the property tax aids and credits portion of the spreadsheet is once again on pages 7 through 11. And as we look at the spreadsheet, between lines 6 and 40 on page 7, there are no changes there. Mostly because those are mostly interactions. You've seen those provisions before between the House and Senate. Moving down to through page 8, you'll see line 54, that's total homestead credit state refund changes. There are no changes there. The section 55 through 60, line 57 is where you see the repeal of the property tax, the renter property tax refund. And it's those negative components that you'll see in the tails, a total of negative 466,300. Once again, that is what we've seen in the House version of the spreadsheet. And so the section renter's credit targeting provisions are all what we've seen before. Major changes to highlight fall in the aids and credit section, lines 61 through 98. The first is on line 63, the local government aid increase. Instead of $34 million per year in each year in the tails, it is now $30 million per year. And there are some language changes associated with that. And Mr. Swanson, Mr. Arneson will probably go through that. Line 73, county program aid, that has changed. That was at $13 million per year in the tails. It is now $30 million per year for a total of $60. Moving down the sheet, line 76, workforce career academies is now at $24 million. Before, it was at 40 million. And it's a one-time provision in fiscal '23. The next change is the county pandemic rental assistant payment. That is, once again, a one-time appropriation in fiscal '23 of $20 million. It was before $25 million. On line 87 is another change. This is the electric generation transition aid to local governments. That was a provision that was originally in the Senate version in the tails. We've made that a one-time appropriation in fiscal '23 only. Moving on to page 9 in line 95 is the Soil and Water Conservation District aid. This aid originally started in fiscal '22-23 in the House version of the spreadsheet with $22 million per year. Right now, in the conference agreement, it is at $6 million per year starting in fiscal '24 for a total of $12 million for the tails. So total local aid changes have changed significantly, with a total of just under 50 million in '22 and '23 and 218 million or so in fiscal '24 and '25. There have been no property tax credit changes. You've seen those in either the House or fiscal or Senate versions. And moving further on down the spreadsheet to the other changes, here we have some significant adjustments as well. Starting on line 111, we have the Housing Development Fund Workforce and Affordable Housing account. That originally was at $10 million per year in the House version of the spreadsheet, starting in 2023. It is still starting in 2023, but at 7.5 million, and then extending that amount to each year of the tails. Line 112 is Polar Vortex Energy Credit. This was originally on the tax policy side of the spreadsheet. That was intended for, I believe it's an income tax refund. It is now going to be a one-time energy credit at an amount of 14.7 million in just fiscal 2023. The next item of change is line 119 for Cook County and Lake County property tax refunds. This was Senator Bach's provision added to the spreadsheet, and I'm sure we'll talk about that in a little bit later. That impact is fiscal '23, only at $240,000. And then finally, the last change is on line 123. This is administration for the Housing Finance Agency at $150,000 in fiscal 2022 as they prepare for the home ownership workforce development account. And then, Madam Chair, that brings us to the totals. And once again, it's 71.65 million in fiscal '22 and '23, and then the negative 144,850 in the tails. That concludes the property tax aids and credits portion of the spreadsheet.
Thank you, Ms. Shield. Any comments or questions? Chair Marquart.
Well, thank you very much, Ms. Schill, and I think sometimes it's tough to read that last number because there's a minus because of the movement of the renter's refund to a credit. But if you total up all of the property tax relief in this bill, it is a total of $659 million into the next 2 years. And if you count direct property tax cuts, so dollar for dollar, so the commercial industrial property tax cut, the homestead credit state refund, the PILT, the district, the school equalization, the ag to school credit, the renter's credit, the direct dollar for dollar property tax cuts are $539 million. 82% of that is direct dollar for dollar property tax relief. I should say property tax cuts. So that is significant. I've said this before, but for homeowners and renters, that's the second biggest property tax cut since 2001. And it's significant. And it's nice on the Soil and Water Conservation District to get that funding in at $6 million a year, which will be in addition to other sources that they have also. So that's going to be significant there. So, and then, I'm not even counting the $60 million each to local government aid and county program aid. So this is a significant property tax bill. And I really want to thank Chair Joachim and Chair Weber for their efforts in doing all that. So thank you, Ms. Schill, for all of your help in putting everything together.
Thank you so much. And I do want to turn it over to Chair Weber for a moment. Thank you so much, Chair Weber, for your excellent work on the property tax piece. We know that's one of the things that is impacting Minnesotans most directly right now, and we're hearing so much about that, especially on top with escalating property valuations. And I wanted to give you an opportunity if you had a few comments or anything you wanted to mention or point out in the property tax relief.
Well, thank you, Madam Chair. I think the important thing in considering the property taxes, besides the items that have been mentioned by Chair Marquart, are also the homestead exclusion amounts that have been increased for residential, ag, and resort properties. It's really important, I believe, that as we go forward, we have to recognize that property values have greatly increased, and while we all recognize that at the end of the day, the real estate taxes are made up of the levies that are generated by our local units of government, there are certainly things we can do, and as we no doubt will shift some taxes as a result of those homestead exclusions creates the importance for having the commercial, industrial, and seasonal rec taken care of in terms of our reduction of this general levy. And I believe that the other issues that we are dealing with in terms of property tax reform certainly will help provide a good and strong basis for all the properties that are involved. So thank you to all who've been involved, and thank you, Madam Chair.
Oh, thank you, Chair Weber. I would just say on that misnamed CI general levy, many of us have worked for years, since I came here as a freshman, to eliminate that thing. We aren't quite there yet, but I will say years ago, we're moving in the right direction, but we're taking a big step forward now. Years ago, when I first started working on this, it was $810 million a year, and so that was a decade ago. So we have been moving in the right direction, but at a slow pace. And so I think the step that we are taking tonight and this year is significant in really bringing down that CI general levy, misnamed CI general levy. It's not really a general levy. It comes right up here to the St. Paul Treasury to go through our general fund. And I could say, and I just want to mention before we leave the property taxes, it could never be more important. Our brick and mortar, commercial, industrial, those are the basis of many of our property tax valuations in our cities throughout this state. And yet it's those brick and mortar shops, stores, restaurants, businesses, offices that have been hit so hard during this pandemic. They were closed, and yet their property taxes continued, and about 29% on top of normal property taxes for cities, counties, and schools, which are real property taxes, was this kind of manufactured thing called this, I call it a misnamed statewide general levy. So this is an absolutely great thing that we are taking a big chunk out of that in this property tax bill. And again, with going through the pandemic and then really the much change in retail, as we have seen an increase in online purchases, it is absolutely essential that we get rid of this very unfavorable burden on our brick and mortar businesses. So we are glad to be taking a step in the right direction, and I really salute Senator Weber for shepherding this through. So that's all I think we might have on property taxes. Yes, Chair Joachim, property tax chair from the House.
Yes, thank you, Madam Chair, and thank you, Senator Weber, for being such a great partner on this and discussing all these different issues. I think we both, having served in local government, have a passion about property taxes and understanding that up at the state level, we can look carefully on shifts, but we can only really help with those aids and credits too after keeping an eagle eye on the shifts. And very proud of the work we've done to make sure that our seniors have a tool in the senior deferral after being in their maybe downsized home after 5 years instead of 15, that we put some money into the property tax refund, especially for those making $21,000 to $71,000. Those are our starting teachers, our nurses, our folks in the middle class, or maybe even making minimum wage. So really happy about that. And as you said, the Homestead Exclusion will help those rising valuations folks have been seeing in their mail. And very excited about, of course, the renter's credit. The renter's credit reaches every corner of our state. In particular, those 30% of those that utilize it right now are seniors or those who are disabled. So very happy with the product we have. We still have some work to do next year, though. Really wish we could have gotten the LGA formula fix on there. LGA is such an incredibly important tool for our cities to help provide those basic services. We used to joke in city council, it really is about flushing the toilet, driving on a road, or calling a first responder. So we'll keep working on that as well. But I think we have a good property tax provision here. And I can't forget, before I turn it back over, is really happy we could put a dent into the school equalization for the school districts that are in property poor districts. So I think we put a good package here together. Always could be better, but it was a good package.
Thank you so much. Senator Gazelka.
Thank you, Madam Chair. Just a few comments. I am glad we're working at the business property tax CI. If you just go through the last few years and what they've had to do with businesses closing and leaving properties, those people that own some of those buildings and the commercial buildings still had to continue to pay the same taxes no matter what. And as things are going up, they're just passing it on to the people that are renting those buildings. So as we begin to move that down, it is gonna make a difference on all of those small businesses that are in those properties. And then just one comment on the soil and water part. It's not where I thought we should go, but I know that they pushed to have their funding this direction, but I just hope it works out the way they think. They're now gonna, it very well could in the future have to compete with everyone else versus the other way that we were doing it. So we're gonna find out, but I'm certainly, as a compromise position, willing to do this.
Thank you, Senator Gazelka. And yes, this was not a Senate provision, but I would say it has been modified significantly. And, you know, I tend to agree with you. I've never heard of somebody saying, well, I no longer want dedicated funding. I want to hop into the $54 billion general fund and compete for that every 2 years. They're both every 2 years. But anyway, that is what we're doing. And, you know, we can always revisit if we need to. But I see.
Madam Chair?
Yes. Ms. Schill.
Before we close out, it's been brought to my attention that at the bottom of page 9, line 126, we've discovered a math error.
No kidding.
And we want to make sure that everyone has the right numbers.
All right.
If you take a look at the
Excuse
fiscal.
me, let me just restate that. We are on page 9.
Page 9, line 126.
126.
The totals for 22 and 23 are not adding correctly. That total in 22, 23 should be adding both those figures, and it's just right now picking up 23. So what we want to put on the record is that the total spending would be $74,315,000. And so that number would also be picked up incorrectly on the front page that I started out with, line 7. And so line 7 should on the front page, page 1, in column 22 and 23, should read $74,315,000.
Thank you.
And we will provide an updated spreadsheet and post it as soon as this meeting concludes.
Well, thank you, Ms. Schill. I have to say, there are so many numbers, and they have been in such not that the numbers are in flux, but things continue to change as we make things better or find something that we missed. And so I am quite pleasantly surprised to see such a small error, but to have it corrected right away. So congratulations on catching that, and we've got that on the record. Well, I'm sure we'll get it corrected next time. So thank you so much.
Thank you.
Any further questions or comments for Ms. Schill? Well, thank you so much. We'll leave the property tax section, and we will visit with you most likely tomorrow. All right, thank you so much. So, members, then we'll move on to our walkthrough of the spreadsheet, and we will start at the beginning. We will start with those conformity items, which, well, actually, I'm going to turn it over, I think, to, is Jay here, or is he online? Jay, do you want to just speak briefly about the front page on this sheet before we go past that, and then we'll move into the conformity items? Mr. Wilms.
Thank you, Madam Chair and committee members. Are you asking specifically if I should speak to the corrected numbers on the? front
Yeah,
of it?
just, or just to the front page in
Okay.
general, just briefly, very high level.
Okay. Madam Chair and committee members, the front page of the document, as noted previously, is 619 timestamp, indicates in the first two lines the general fund forecast as of February 2022. Lines 6 through 8 then show the change items that are reflected on the following pages of the document. The tax policy total, as detailed in the first column, is a general fund reduction of $1.374 billion in FY 22-23, and then a reduction to the general fund estimated of $2.59 billion in 24-25, less the property tax refunds, aids, and credits. The new number, as detailed earlier, brings the subtotal for that on line 8 to general fund reduction of $1.446.4 billion. And then in FY 24-25, the total remains the same, 2.4 estimated billion reduction. This conforms to the $4 billion target as provided through the global framework for all years. In fact, it's slightly under that amount. And then the lines 10 through 20 detail the non-general fund changes, which will be discussed later.
Thank you, Mr. Wilms. And with that, then we will move on to page 2, which is those conformity items. There's a lot here. We could have maybe a very high-level overview. There's really nothing much new here. We've been over it many times, so I think we just need to know if there's any changes, any very high-level things, or if you want to mention the ones that are the most shuttered venues, whatever, in ones that certainly resonate, but I'll let you choose how you want to give a high-level overview. I'm going to turn it over to Mr. Wilms and Ms. Templin to determine how to do this. Ms.
Thank you,
Templin.
Madam Chair and members. Cynthia Templin, House Fiscal Staff. Looking at the spreadsheet on pages 2 and 4, pages 2 and 4 have the federal conformity changes for individual income tax and corporate franchise tax. Just at a very high level, the changes in the conference agreement are very similar to the House approach to federal conformity. And in that approach, there was a retroactive, the provisions retroactively adopted most changes in federal law, and it allowed taxpayers with a retroactive change in taxable income to make a special adjustment, or it will allow them to make a special adjustment on their 2022 return, and for individual income taxes and corporate taxes. Taxpayers will not be able to amend their prior year returns with this special adjustment, with the exception of a few provisions, with about 6 provisions. And those provisions are on line 12, the discharge of indebtedness for qualified principal residents. Line 17, the special disaster related rules for use of retirement funds. Line 19, the SBA loan assistance. Line 20, the exclusion of shuttered venue grants. Line 28, the discharged student loans exclusion. And line 30, the exclusion of restaurant revitalization grants. Oh, and I skipped one, in line 29, the EIDL loan advances. And the corresponding provisions in the corporate franchise tax are also affected. And then one other kind of high-level summary regarding the conference agreement. As I said, it's similar to the House approach with the exception of, in addition, the conference agreement. In the House approach, the House did not conform to a few retroactive provisions related to the charitable deduction provisions, but in the conference agreement, there is conformity to those retroactive provisions. So the cost is higher on net in the conference agreement for federal conformity. The total revenue reduction is $101,880,000, and in fiscal '24 and '25, the revenue reduction is estimated to be $30.5 million.
Thank you.
Okay. And Madam Chair, I was just discussing with Mr. Wilms. I think the approach we'll take is that I will just highlight the provisions that have changed in the conference agreement that the House had in its omnibus bill. And just looking at page 3 for, this is the non-conformity provisions. Lines 36 through 68 show the non-conformity individual income tax provisions. For the House, one provision that did change relative to what passed the House floor is on lines 41 and 42, and that is the child and dependent care tax credit. In the House bill, that had a revenue reduction of roughly about $200 million a year, and in the conference agreement, the estimated revenue impact per year is around $55 million. So that provision has been scaled down in the conference agreement. The other provisions on the spreadsheet in the individual income tax area relative to what the House had have stayed the same in the conference agreement.
Senator Rust.
May I ask a question?
Yes.
On the, on line 41, what were the, excuse me, Madam Chair, what was, on line 41, what were the major changes in the actual provision that led to such a different revenue impact?
Ms. Templin or?
Madam Chair,
Marquart?
Senator Rest, the major change in that, for that proposal was that the maximum eligible expenses were decreased from $3,000 and $6,000 per year to the young, and it's the young child eligible expenses were changed. The phase out they were reduced overall. I'm sorry,
Chair Marquart.
Yeah.
Chair Marquart.
Just want to know the numbers.
So,
But
yeah.
Senator Rest, the maximum eligible, the rate for the credit remained the same at 50%. It's the maximum expenses that were significantly reduced.
And
Madam
So,
Chair,
Senator,
and Ms.
Representative
Templin
Marquart,
is
the-
exactly right. And just to add a little more context to that, Senator
thank you.
Rest, so kind of the maximum credit that was allowed under the bill that left the House was $3,000 for one child between 0 and 4, 6,000 for two and 7,500 for a max. This now is 2,000 for one child, 4,000 for two, 4,500 for three. The income limits began phasing out at 125,000 in the, our bill initially, and now it's 80,000 begins to phase out and phased out completely at 105,000.
And, Madam Chair, and
Senator Rest.
Representative Marquart, so that brought the, that item down almost $100 billion? Is that what you're saying?
Chair Marquardt.
Madam
To
Speaker and
55.
Senator Rest, yeah, I think going out it was 183 million in the first biennium, about 183 in the first, I think it was about 370 or 380 in the second biennium. So yeah, it probably got cut down a little more than half, more than half, so.
Ms. Templin.
And Mr. Chair, and you mentioned this, just to add more detail, the rate of phase-out is different also in the agreement.
Thank
Senator
you.
Rest.
Thank you, Madam Chair, Representative Marquardt. I regret you had to do that. There was a good provision, and I'm sorry that it won't be as generous to parents as had originally passed the House, but I'm grateful for it anyway. Thank you.
Thank you, Senator Rest. All right. Who's up next? Mr. Wellens.
Okay, thank you, Madam Chair and committee members. On the Senate side, a couple of key things to note were the inclusion of the 100% Social Security subtraction beginning in tax year 22. The first year effect is a general fund reduction of 510 million approximately, and 1.125 billion in the second biennium. In addition, the first bracket rate reduction was included at a smaller amount. The Senate proposal had included a reduction to 2.8%, and this reduction is 25 basis points to 5.1% from 5.35%. And that's also effective in tax year 22, and the effect is a reduction of 277 million in the first fiscal year, and then approximately 391 million in the tails. Additionally, the spreadsheet indicates that the K-12 education tax credit is included. The Senate had this at a smaller phase-out threshold and adopted the House position in the agreement. And then, in addition, the Senate had the child independent tax credit at a smaller amount, but that is replaced by the child independent care tax credit as revised, as my colleague Ms. Templin spoke to. And I think that details kind of the highlights for the income tax.
Ms. Templin.
Madam Chair and members, at the bottom of the spreadsheet, I want to just sum up the total individual income tax revenue reductions. You can see on lines 34 and line 68. If you add those two lines together in fiscal 22 and 23, the total individual income tax reductions for the fiscal 22-23 biennium are estimated to be $1,307 million. And in the fiscal 24 and 25 biennium, the estimated revenue reductions to individual income taxes is $2,433 million.
Quite significant.
Madam Chair.
Mr. Chair, yes.
So, Ms. Templin, to get the total income tax cuts, you would add those, all those numbers up. Do you have what that number is if you totaled all that up that you just said?
Yes, it's the sum of, yes, that is the total amount, the $1,307 million is the sum of the individual income tax changes plus the federal conformity income tax changes.
Ms. Templin, but that's just for 22, 23.
Yes.
What is the total?
The total-
Individual income tax cuts for 22, 23, and then 24, 25 in the bill.
Yeah, go ahead.
Mr. Chair and committee members, the amount is 3.642 billion over all 3 years of the budget period.
Thank you, Madam Chair. $3.64 billion of individual income tax cuts. Senator Bach, I know you've been around a long time, but I think it's very safe to say that it's not even close. This is the biggest individual income tax cut in the history of this great state.
Senator Bach.
Well, Mr. Chairman, in my tenure here, I haven't seen anything this large in a tax bill, especially in the income tax area. It's pretty remarkable, actually. This legislature has been blessed with a huge surplus that the taxpayer sent us, and I'm glad we're able to return a big chunk of it back to them. So it's, I want to thank both of you and frankly, all four caucuses for getting this done.
Senator Bach. Yes, I would say this is a historic piece right here, and we must not, I know most of us hear that, and we think we hear million, we just don't hear billions very often. But we've entered a new phase now when it comes to our tax spreadsheet. We're seeing billions, and billions of income tax reductions are so significant for Minnesotans right now. So, and as you noted, Senator Bach, we are on this tax conference committee at an incredible point, an incredible inflection point in history where we have such a large surplus. So I am very pleased that we are able to return this to the taxpayers who have overpaid for the services that our budget called for. So $3.642 billion of income tax relief. Well, let's
Income tax cuts.
let's just say the word
is
cut.
cuts.
It's not relief, it's cuts. All right, okay. Members, any further comments on the income tax part of the bill before we move forward? Mr. Wilms.
Madam Chair, and we can go pretty quickly through the rest of it. The corporate franchise tax related to conformity, those are all previously detailed in the income tax section, except for some provisions that don't carry any major effects on the spreadsheet. So we can skip right past those, other than to note that the estimated reduction in FY 22-23 is $27.2 million, and in the tails, $6.8 million. The biggest change item here that is of note in the other corporate franchise tax provisions is the repeal of the historic structure rehabilitation credit sunset. The total overall effect over all the years of the budget period is approximately $38 million. And then we see the R&D credit Senate provision that increased the second tier from 4% to 4.25%. With regard to the previous item I mentioned, the historic structure rehabilitation credit, both the House and Senate had that provision, except the Senate had a provision that kept the federal 5-year expensing period, and these numbers reflect that retention of that expensing period. And then we can move now to the sales and use tax section.
Yes, Madam Chair and members,
Simple.
sales tax, starting at the bottom of page 4, and moving to page 5 are the sales tax provisions, and lines 97 through 103 reflect sales tax exemptions for construction materials. And in the House Omnibus bill, that had a general construction exemption that was a temporary exemption for construction, and it was limited to an 18-month period for the exemption with 2 years to get the refund. In the conference agreement, the general exemption for that temporary period was dropped. And in the conference agreement, instead, you can see on lines 97 through 103 are individual projects, and these bills are in the conference agreement as kind of standalone provisions. They are not. They are effective for the period that was in the language, and Unlike the House approach, they are not limited to just having a fiscal impact in fiscal '22 and '23, but the provisions for these individual projects have fiscal impact in the current biennium and in fiscal '24 and '25.
Senator Rest.
Thank you. I see on line 99, it just says, thank you. I see, Madam Chair, I see on line 99, it says various school building projects. Can you tell me what they are?
Thank you, Senator Rest. I'm glad, we do have a sheet of all of those projects. I don't know that it's been posted. I think it was posted yesterday. And if someone would like to read those off, we can, but there's a full sheet of those various projects.
If I could just have the sheet, that would be fine.
Yeah, okay, and that sheet should be online, and we'll be glad to address any further questions on that.
Thank you.
All right, thank you.
Madam Chair and members, moving on. For the House, for sales tax, there are no other provisions that have changed relative to what was in the House Omnibus bill.
Mr. Wilms?
Madam Chair and committee members, what I would note is the inclusion of, from the Senate side, the exemption for sweet licensed food and beverages and amenities included with admission. Also the exemption for nonprofit animal shelters and sales and related purchases. And then the exemption for the polar vortex related natural gas charges for those that are charged outside of the tax expenditure billing months for heating charges. And then that is in addition to the House's provision, which my colleague, or our colleague Michelle detailed earlier, related to the utility rebate grants. And then line 111 shows an exemption for selected healthcare materials. And so the total for the subtotal for sales and use taxes is $11.3 million general fund reduction and 22.62 in the tails. Moving on to the estate tax, the Senate includes, or this agreement includes the Senate provision of spousal portability for the exclusion, the unused portion. That has a general fund estimated effect of 1.1 million in 22-23 and an estimated reduction in the tails of 10.4 million.
Senator Rest.
Is that what we've also called, Madam Chair, durable medical goods? Is that what that line refers to?
Madam
And
Chair.
other,
Mr. Wells.
other, venues?
Madam Chair and committee members, I've been corrected on this several times by counsel in the Senate. It is not that, I don't believe, but I think I would have to field the question to Ms. Pollock. But I think it's similar to that tax expenditure, durable medical goods, but it's different, and I would need to call on her to explain the nuances of it.
Okay, I would like to know.
Yes, we have Ms.
Madam
Pollock
Chair?
online. Yes,
Madam Chair, I'm Nora Pollock. I can explain that Senator Rest question.
yes, please.
Sure. Senator, committee members and Senator Rest, the language relating to the healthcare equipment on the line that Mr. Wilms was describing, or healthcare materials, pertains to essentially things that are not already exempt under the current durable medical goods exemption. And also it pertains to items that are not exempt under the current exemption for items purchased in transactions covered by Medicare and Medicaid. This exemption would also apply to transactions covered under other insurance.
Thank you, Ms. Pollock. And Senator Rest, I thank you for the clarification. This is something we've worked on for a couple of years, the durable medical
understand that.
goods. It's not been clear. It's been very confusing for customers, patients, and of course, the durable medical goods as well, too. So there's been a bit of work on this. I think this will really help clear that up. So thank you for bringing that up. And then while we're stopped here just a second, I think perhaps Mr. Swanson, Mr. Clayman, might have just that list that Senator Rest had asked about regarding various school building projects, construction.
Madam Chair, members, and Senator Rest, so the individual construction sales tax exemptions that are part of the agreement are the exemptions for Mazeppa, the extension of the expiration date, Itasca County Courts, Maple Grove, Wayzata, Minneapolis-St. Paul Airport, and then the following schools: Chisholm, Duluth, Nashwauk, Keewatin, Ely, Hibbing, Rockridge, Northland, and Northern Lights.
Thank you. We did notice that. All right. That's not triple RB.
Madam
Okay.
Chair,
Thank you very much
There's nothing
for
like
that.
transparency.
We are glad we have that. Thank you, Senator Rest.
Just so
All
that
right.
everyone understands, that actually was a bill of Senator Thomasoni's.
Would you like to say anything further about that, Senator Bach?
It's a good provision, vote for it.
That's what Senator Thomasoni would say. All right. Okay, we're ready to move on. We've talked about the estate tax. Are we ready to move on to the next page? Page 6?
Madam Chair and committee members, page 6 begins with statewide property tax. That's the state general levy as described earlier. Where, this shows on line 121 a reduction of approximately 30 million to the statewide general levy. This is a proportional reduction for both commercial industrial property and seasonal recreational residential. And it's ongoing, it's a permanent reduction. The Senate does not, or the agreement does not include the Senate's earlier proposal to have a 10-year phase out, but this change is ongoing outside the forecast period. Okay, and then moving on to lawful gambling, this is the Senate's provision on first bracket rate reduction from 9%, or excuse me, first bracket rate expansion to 100,000 from 87,500. So it pushes more of the income into the first bracket, and then also concurrently lowers the first rate applied to that first bracket from 9% to 5%. It results in a maximum of approximately $5,200 in tax reduction for each organization, and it's ongoing, beginning in fiscal year '24.
And then finally, Madam Chair and members, on the spreadsheet, starting on line 129, this is the other tax revenue. This is a House provision, it didn't change. This is a reallocation of funding from the general fund to the environmental fund for SCORE grants. And that is 3.1 million in fiscal '22 and '23 and 6.4 million in fiscal '24 and '25. That is a quick summary, high-level summary of the tax policy revenue changes to the general fund.
Thank you. All right. Anything else? Okay. Members?
Okay.
Any questions? We went through the property taxes earlier.
Madam Chair,
Yes, Mr. Chair.
if we could go to the very last page, page 12. So, as much as the House, on line number 7, as much as the House would like the tourism improvement special taxing districts, I don't think that was agreed upon.
It was not.
Darn. So that probably shouldn't be there, just that. And also in line number 43, like I said, I don't know how much of a difference it makes, but Moorhead does not have that first E. It's just MOORHEAD. Like I said, I don't know if that
That
matters,
is
but I
very
just,
important.
I just,
I had to correct a bill once that spelled Olmsted wrong.
yeah, so, okay.
Hey.
So just so we have
Let's get it
everything
right.
good, just so there isn't a conflict there. I don't know if there's another Moorhead with an E like that in the state, but just, could be, yes.
So, I don't see any other comments or questions. It might be important to just, for people who want to know about these TIF provisions or these local option sales taxes who might not have these in front of them. I'll just read those off briefly so that they are on the record for those who do not have those. And I won't speak to all of them, but I will speak to the City of Virginia, exempted from the net debt limit. Regarding TIF, there's an update, the state auditor, specifically Plymouth TIF, Hopkins, Savage, Woodbury, Fridley, Shakopee, all of those TIF provisions passed or are included here. And then we have the local option sales taxes for there's some general changes, but the specific cities that you will see are Grand Rapids, Henderson, Proctor, Winona County, Rice County, Bloomington, Edina, Brooklyn Center, Roseville, Aiken, Golden Valley, Black Duck, East Grand Forks, Rochester, Marshall, Waite Park, Park Rapids, Moorhead, and Oakdale. Some of those are extensions.
Madam Chair. Madam Chair.
Yes,
Yes. There are a few line items here in the local sales tax category that are not in the agreement. So if possible, maybe I could send you an updated list.
yes, I think we should redo this whole page just to make sure
Yeah,
that we have it correct.
Madam Chair.
Yes.
Yeah,
Chair, you
Park
can-
Rapids is not included.
Pardon me?
Park Rapids is not included.
Yes. Okay, so we are going to not look at those items right now, and we'll get an updated sheet that will better reflect the current conditions. So thank you so much. All right, so that is page 12. So do we want to go to page 12? Yeah, thank you. All right, so what we'll do is we'll adopt everything. Sounds good. Okay, are we ready? Okay. Any further comments, members? All right, well, Senator Rest.
Madam Chair, not to throw a wrench here, but I did get some information that I think that we should consider at some point relative to other people who receive pensions but not Social Security. We know that the Social Security tax cut is great for about 500,000 people, but it leaves out about 25,000 retired police, fire, teachers, City of Minneapolis, MRF, and federal employees who aren't in Social Security or if they are, have to take a significant reduction because their basic pension plan is not coordinated with Social Security. Most of these retirees or their surviving spouses have modest pensions. These retirees are being left out. All or some of their pension should get the same break as these other retired Minnesotans get. These people did not get the 5.9 Social Security raise on January 1st. Most got only 1%. I know that we are in the 24th hour, but I think it is a basic fairness question. And I would hope that leadership and our two tax chairs might speak with leadership and see whether there's a opportunity to address those needs. And this was brought up a few years ago, sympathetically, I think, at the time, and at that point, it was a cost of $40 million. But I just bring it up now, not to stop the spreadsheet necessarily, but just to indicate that there are other retirees that we should be paying attention to that do things like take care of us in the public, in particular, police and fire, and obviously some other public employees too that are not eligible for Social Security. Just bringing it up.
Thank you, Senator Rest. Well noted, and of course, we need look no further than our neighbor to the south to realize that they have, they've exempted Social Security benefits for years, but now they have exempted all retirement income from taxation. So certainly something we can look at in the future. You're right, it is the 24th hour to do so this year, but we are taking a big step in removing the full taxation on Social Security benefits. And I also want to add that is Social Security disability benefits as well, removing that taxation. And we'll look at other things as we go forward, I'm sure, particularly as other states have continued to remove all that retirement income taxation.
We've
All
got
right.
30 hours, you know.
Yes. All right. Any other questions or comments as we get ready to adopt the spreadsheet? Well, this is extraordinary. Let's, who would like to move? Would you like to make the motion? Pages 1 to 11.
Madam Chair, I'll move to adopt the spreadsheet, pages 1 to 11, dated May 21st, 2022, with the 6/19 timestamp, the House File 3669, and direct staff to draft language conforming to the agreement reflected in the spreadsheet as corrected by the fiscal staff.
All those in favor signify by saying aye.
Aye.
Aye. Opposed? Spreadsheet is adopted. And to note, we will update the other items, some we've already adopted regarding those local option sales taxes and TIFs, so they will not be forgotten. Okay, members, so very well done tonight. We believe that there are several articles that are ready for adoption, and I'm going to recess for just about 10 minutes to confirm that. We believe that we have the sales and use tax, the conformity, and one other article that may be ready for adoption this evening. That would be our intent. If they're ready, we would adopt those articles and then adjourn until tomorrow. So let's just take about a 5 or 10 minute.
Madam Chair?
Yes.
If I
Mr.
might,
Chair
before
Marquart.
we recess here, I would like to join you in thanking our fantastic fiscal staff for their hard work in putting all this together. And you and I have not made it easy with little changes along the way.
Yes.
So thank you so much for your presentation and your work
Yes,
today.
we do thank the staff. It's been quite remarkable. And to make all these changes along the way, and it isn't just you and I, it's our members as well.
I know.
But taking care of all those needs in a timely manner, and I cannot thank the staff enough. And I know you're working hard and long, and we're missing some, so thank you very much. Take about, I'm gonna recess here until 7:50, so just a short little recess, just to get an update on those articles. So stretch your legs, we'll be in recess for 10 minutes.